tunaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Good morning, ladies and gentlemen. We want to welcome you to this meeting. And before we start, I want to welcome our Finance Director to lead us in a short word of prayer. Can we be in prayer?
Good morning. Let us bow our heads for prayer. Heavenly Father, we thank you for the opportunity to gather us for this annual general meeting. We are grateful for the journey you've brought us through and for the trust our investors have placed in us. As we present our reports and engage in open dialogue, grant us wisdom, transparency, and grace. May this meeting strengthen our relationships, address all concerns with clarity and care, and guide us towards even greater growth. Bless every participant today, and may our discussions be fruitful and forward-looking. In your name we pray. Amen.
Thank you very much. We want once again to welcome you to this meeting, which is the first annual general meeting of Standard Investment Trust Funds. And my name, to start off, is Job Kihumba. I'm a director at Standard Investment Bank. Standard Investment Bank is the fund manager for these trust funds, and I'll be your share this morning. Thank you very much. I'm joined by directors from Standard Investment Bank and other service providers, professionals in their own right, and I will be introducing them shortly. The meeting is being held virtually as per the company's Articles of Association. The meeting has been convened to conduct and the business set out in the notice that has been sent out. As a board, we recognize, respect, and undertake to protect the rights of members, whilst at the same time facilitating effective exercise of those rights. Accordingly, while convening and conducting this meeting, the board has ensured that the actions of the company ensures equitable treatment of all members of these funds. I now want to confirm that we have a quorum for this meeting. Because it's an electronic meeting, we requested people to confirm those who will be joining us online. And until now, we have received about 5,100 members and also received 3 proxies. These jointly represent about 16.5% of the registered voters who would be participating in this meeting. In this regard, therefore, it is my singular honor to declare that we have a meeting that is quorate because we have received the necessary numbers that are needed under the regulations. It is now my joy to introduce those who are here with me this morning. And I will, on my immediate right, I have with me Miss CPA Pauline Moy, who is the Executive Director in charge of finance at the Standard Investment Bank, who I had already said is the fund manager for these funds. Pauline?
Good morning again and welcome to the AGM. My name is Pauline Mwai. Thank you.
Thank you very much, Pauline. Next to him is the secretary for our purposes of this meeting, Mr. Stan Murage.
Good morning, ladies and gentlemen. I welcome you to this first AGM. I'll be the secretary for the meeting.
Thank you, Mr. Murage, for this. Next to him is Mr. Jero, who is the auditor for these funds.
Good morning, everybody. My name is Njero Mwangi from Chatafy LLP, the auditors of the fund.
Thank you very much, Brother Jero. On my left, immediately after me, is Mr. Nahashon Mungai. Nahashon Mungai is an executive director in charge of corporate markets, who is, as I said again, I'm repeating this, Standard Investment Bank is the fund manager for these funds. And I will now welcome him.
Good morning, everybody, and welcome to our AGM. My name is Nahashon Mungai. I'm the Executive Director for Global Markets at Standard Investment Bank, and I'm also the Portfolio Manager for the Standard Investment Trust Funds. Thank you.
Next to him is a very important group of people, our trustees. Our trustees, as you know, within the regulations, take care of all the investment and assets that are put there by the fund manager. And these are represented Mr. Kevin Arisha, who is the CEO of Kingsland Court Trustees Limited. Kevin?
Thank you, Bwana Chairman. Good morning, everyone. Thank you for joining us. And let's have a very good, fruitful first AGM for the Trust Fund. Thank you.
Thank you very much, Kevin. I now would like to acknowledge the presence of the representatives of Capital Markets Authority who are attending virtually, and also our own other directors of the Board of Standard Investment Bank who are attending the meeting virtually. Thank you. Finally, we want to acknowledge the presence of our sign language interpreter, Miss Elizabeth Wainaina. Thank you very much. I will now take this opportunity, ladies and gentlemen, to invite our secretary, Dan Murage. I note that I had misnamed him, but I'm sure you'll forgive me for this. He is Dan Murage. He will be our secretary for purposes of this meeting, and he will need the notice convening this meeting. Welcome, Dan.
Thank you, Bwana Chair, and welcome again, ladies and gentlemen. I will read the notice and agenda for the first annual general meeting of the Standard Investment Bank MANSA X Special Fund. So, our dear investors, notice is hereby given that pursuant to the Regulation 134 of the Capital Markets Collective Investment Schemes Regulation 2023, the first annual general meeting of the Standard Investment Bank MANSA X Special Fund will be held virtually on this day, the Friday, 16th of May, at 10 a.m. to conduct the following business. The first agenda shall be the notice and constitution of the meeting, under which there is a sub-agenda 1, to read the notice convening the meeting and adopting the agenda. And the second sub-agenda will be to table the proxies and determine the presence of a quorum. The second agenda shall be introductions, where we will welcome and introduce the service providers by the fund manager and get remarks by the managing director, which is the chair currently, of the Standard Investment Bank. The third agenda shall be presentation of reports, under which we will receive, consider and adopt the audited financial statements for the year ended 31st December 2024, together with the auditor's report thereon. Second sub-agenda shall be to receive and consider the report by the fund manager, and also to receive and consider the report by the trustee. The fourth agenda shall be questions and comments, and the fifth agenda shall be any other business that shall be transacted. This is by order of the trustee, and I'll hand it over back to the chair.
Thank you, Dan, for reading to us the agenda. We now would want to bring this to your notice, members, that you can share your questions via the question tab on your web portal, which is provided for you, as well as you can use your USSD code, which is star 483 star 104 hash, and you can then choose the questions options that is provided, and then you can put down your questions. I hope that is in order. Thank you very much. I would now like to invite our Finance Director, CPA Pauline Mwai, to read for us the financial reports. Welcome, Pauline.
Good morning again, investors. I'm going to present two FADs. The first one will be the MANSA X Special FAD KS, and the second one will be the MANSA X Special FAD USD. We'll start with the MANSA X Special FAD KS. The audited balances as at December 2024. We'll start with the statement of comprehensive income, and we'll start with the first line of income, which is the investment income. In 2024, we returned 5.2 billion, and compared to 3.4 billion in 2023 at the investment income. There's also another line of income called interest income, calculated using effective rate. We returned 232 million compared to 299 million. The third line is fair value gain on financial assets at fair value through profit and loss. We returned 1 billion and 27 million compared to a loss in 2023 of 32 million. We also had another line called other income in 2024 for 204 million compared to 16 million in 2023. We also adopted the IFRS 9 in transition from IAS 39. In that case, we had an increase in allowable expected credit loss in 2024, which was 296 million, giving us a total net income of 6.3 billion compared to 3.7 billion in 2023. The only allowable expense under the special CIS license is the financial services charge, which was 1.2 billion in 2024 compared to 801 million in 2023. That left a net surplus attributable to our investors, what was distributed in your statement, as 5.1 billion in 2024 compared to 2.9 billion in 2023. We'll now move on to the statement of financial position for the MANSA X Special KS FAD. We start with the assets. The assets are in two categories. We have the investment balances, and we also have the current assets. So these numbers are in billions. So we start with 2024. The investment balances in 2024 were 31 billion compared to 13 billion in 2023. Then we move on to the current assets, which are in two categories. Cash and bank balances of 7 billion compared to 2.5 billion in 2023. We also, in 2023, had a category called receivables, which was 3.5. The reason why it doesn't appear in 2024 is again the transition from IAS 39 to IFRS 9. That gives us a total current assets of 7 billion compared to 6.1 billion in 2023. Total assets therefore are at 39 billion compared to 19 billion in 2023. Then we move on to the capital and liabilities. Client fund balance in 2024 was 39 billion compared to 19.5 billion in 2023. Payables and accruals are a small balance of 34 million and nothing in 2023. And then due to related parties in 2024 is 5.8 million. This is management fee that had not been withdrawn by the fund manager. That gives us total liabilities of 39 billion in 2024 compared to 19.5 billion in 2023. We now move on to unit holders funds. For the MANSA X Special KES Fund, at the start of the year, our AUM was 19.5 billion, which was what we carried forward from 2023. Then additions, all new investments brought in by our investors, was 23.6 billion in 2024 compared to 9.5 billion in 2023. Then we had redemptions during the year, all withdrawals for the returns and some for complete withdrawals came to 9.1 billion in 2024 compared to 5.3 billion in 2023. Then surplus, all the return that we distributed to you, our investors, was 5.1 billion in 2024 compared to 2.9 billion in 2023. Then withholding taxes on distribution was 34 million compared to 12 million in 2023. That gave us a total net AUM, all assets under management for the investors, at 39 billion compared to 19 billion in 2023. We can now move on to the other fund, the MANSA USD fund. So these are the financial statements for the MANSA X Special Fund USD. These numbers are therefore in the currency of USD. We start with the first line of income, which is the investment income. In 2024, we had $4.3 million compared to $2 million in 2023. Then the other line is interest income calculated using effective interest rate method, which was $511,000 compared to $29,000 in 2023. We had a new line called fair value gain on financial assets at fair value through profit and loss. This is again from the transition of IAS 39 to IFRS 9, giving us $44,000 in 2024. That gave us a total income of $4.8 million in 2024 compared to $2 million in 2023. The only allowable expense is the financial services charge, which in 2024 was $1.7 million compared to $562,000 in 2023. That left us what we distributed to our unit holders as your returns at $3.1 million in 2024 compared to $1.5 million in 2023. We now move on to statement of financial position. For the MANSA USD Special Fund, we start with the first category, which is assets. We have two classes of assets. The first one is credit instruments at amortized costs, which is $5.2 million in 2024 and $4.4 million in 2023. The other class is offshore assets at fair value through profit and loss. That is $41 million in 2024 compared to $9.2 million in 2023. We also had another class, which was an investment in another internal fund within the funds in SIB, which was $1 million in 2024 compared to $1 million in 2023. You'll notice there is an excess of $96,000, which was the return that the investment made in 2024. We move on to now the current assets. The bank, we just go back slightly. There is an account receivable in 2023, which was $1.4 million. You'll notice we are lacking a comparative figure in 2024, again because of the transition to IFRS 9. And then we move on to the bank balances, which are $4.4 million in 2023 compared to $5.5 million in 2024. That gave us total assets of $53.1 million in 2024 compared to $20.6 million in 2023. We move on to the unit holders' balances, which were $53 million in 2024 compared to $20.6 million in 2023. There was a small balance of related parties, which, as I said before, this was the management fee that was yet to be withdrawn by the fund manager, which was $39,000 in 2024, giving us a total unit holders fund of $53.1 million in 2024 compared to $20.6 million in 2023. We can move on to the last report, which is the unit holders funds for the MANSA USD fund. At the start of the year, we had a balance of $20.6 million, which was what we carried forward from 2023. Surplus distributed during the year. This was the return attributable to the investor. In 2024, it was at $3.1 million, and in 2024, it was at $1.5 million. Then additions for the period, these are the new investor balances that came to $38.4 million compared to $19 million in 2023. We have the last one, the redemption or the withdrawals by the investors. Within the 2024, it was $9.1 million compared to $3.8 million in 2023. That left us with assets under management for the MANSA USD fund at $53 million for 2024, and the balance we had carried forward in 2024, that was the end of 2023 at $20.6 million. That brings us to the end of this presentation. I now hand you over to the chairman.
Thank you, Madam Directors, Charge of Finance. We want to now let the people know that the detailed financial statements are available in the website. And in the portal, you can actually access them so that you can be able to read and understand for yourself. And also to remind that you can still ask about this set of finances through the platforms that I had already mentioned. I would now like to welcome our auditor for these funds to make his report.
Thank you, Chair. Once again, my name is Njeru Mwangi from Chatterfy LLP. We were the independent auditors for the fund, Standard Investment Trust Fund. In this case, we are referring to the MANSA X Special Fund, both KES and USD. In our forming our independent auditors report, within our scope, we had the audit of the financial statement for the year ended 31st December 2024, which was conducted in accordance with the International Standard of Auditing. And we evaluated the compliance with the IFRS and Capital Markets Act, mainly the Collective Investment Scheme regulations that were issued in 2023. Informing our opinion, we confirm that we received the necessary accounting records that were in agreement with the books of account. And for forming our opinion, we have also received some of the information and explanation necessary for the said audit opinion. So in this regard, therefore, in our independent audit opinion, we confirm that the Standard Investment Trust Fund, this is MANSA X, Special Fund case, give a true and fair view. And there is a fair presentation of the financial position and net income and cash flows as at 31st December 2024. And we also confirm from regulatory compliance, there is full compliance with IFRS and the CMA guidelines, and there are no matters identified during the audit. For the USD fund, again, we confirm that it is for the period ended 31st December 2024. Again, we conducted the audit in accordance with the International Standard of Audit, and we evaluated compliance with IFRS account that have been read by the Director of Finance, and also the information and explanation necessary that were also relevant for us forming the audit opinion. And in this independent audit opinion, the financial statement of Standard Investment Trust Fund, that is MANSA X Special Fund, USD, give a true and fair view and a fair presentation of the financial position, net income, and cash flows as at 31st December 2024. From regulatory compliance, we confirm that it is in compliance with the financial reporting standard and the CMA guidelines, and there are no reportable matters identified during the audit. In issuance of the report by the trustee, we confirm that the report issued by the trustee is also consistent with the accounts that have been read before you. Thank you very much. Thank you, members.
Thank you very much, Bwana Auditor, for an explicit report. It is now my singular honor to welcome our fund manager, who doubles up also as the portfolio manager for these funds, Mr. Nahashon Mungai.
Good morning, everyone. As mentioned, my name is Nahashon Mungai. I'm the Executive Director for Global Markets here at Standard Investment Bank, and I'm also the Portfolio Manager for the MANSA X Special Funds. Now, just as a clarification, the MANSA X Special Funds are domiciled under the Standard Investment Trust Funds, and there's a reason for this. The most important one being it's a regulatory issue, where once MANSA X was dubbed as a special fund, we actually had to put it separately from a Standard Investment Bank. So it's not under the balance sheet of Standard Investment Bank. That gives investors a lot more safety for their funds because their funds are not commingled with the investment bank. The second thing is that it also gives us a tax exemption status for Standard Investment Bank trust funds. So now the funds are actually separate from the tax issues that you'd have if you were under a normal Standard Investment Bank fund. So I'm going to give a quick overview of the markets, and just a quick brief. The report I'll give is a very abridged version of what you get usually through the year from me. In my YouTube videos, we do a lot of YouTube videos for investors. We also do a lot of global market reviews. We share a lot of reports for you. And the MANSA X funds are diversified into different geographies, and I'll just start with the US. Despite lingering concerns about inflation, high interest rates, and geopolitical uncertainties, 2024 defied initial doubts, delivering strong market returns, particularly in equities. The US economy proved resilient, outpacing developed peers, with mega cap tech, what we like to call the Magnificent Seven, driving the S&P 500 to a 23% gain, the second consecutive year above 20%, which is a rare occurrence in the past 7 decades, having only happened in the 1990s. This was supported by robust GDP growth, low unemployment, strong consumer spending, and moderating inflation, easing recession fears, because we actually had recession fears in 2024. Corporate earnings in 2024 also grew by almost 10%. Sector performance was led by communications, technology, consumer discretionary, and financials, while materials, healthcare, real estate, and energy were laggards. Interest rate expectations shifted throughout the year, because if you remember, the initial forecast for 2024 was that we'd have 7 rate cuts, and this was scaled back due to inflation concerns. And softening economic data led the Federal Reserve to implement 3 rate cuts, totaling 100 basis points in the latter half of the year. So what you have there, 1 minute. So what you have there is the S&P 500 sector performance for last year, and you can see that the major performance for the S&P 500 was actually contributed by communications, which contributed almost 40% to the performance of the S&P 500. IT contributed about 35%. Then the rest were mostly the other 2 big ones were consumer discretionary, financials, and utilities. Then the laggards were actually in materials, healthcare, and real estate. So the U.S. Presidential election caused market volatility, with the Republicans initially boosting sentiment, but a subsequent hawkish Fed stance in December led to equity declines, though the Magnificent Seven remained strong. So if you look at that chart there, that actually shows you the Magnificent Seven. These stocks have been very good to the fund, and have been one of the reasons why the MANSA X fund has performed very well, not just last year, but in the years before that. Last year, we saw the NVIDIA stock gain 171%. That's a phenomenal return. Meta was up 65%, Tesla 62%, Amazon 44%, Alphabet 35%, Apple 30%. And this is in comparison to the S&P itself, which gained 23%. In fact, the only stock in the Magnificent Seven that lagged the S&P was actually Microsoft, which gained only 12%. But all in all, those stocks did very well for the fund in 2024. Across the pond, in the Eurozone, in stark contrast to the US, the Eurozone experienced weaker economic momentum due to high energy costs, regulation, the Chinese competition in key European industries, political instability in France and Germany, where fiscal pressures and the rise of right-wing populist parties further hampered growth. Despite 4 ECB rate cuts, which is much higher than the US, high interest rates and limited AI exposure resulted in a subpar about 6% return in Europe. The UK market fared slightly better with a 7% FTSE 100 return, though fiscal sustainability concerns and rising labor costs created headwinds. In Asia, Japanese equities saw a strong 17.69% gain, driven by US market developments and yen weakness, which boosted exporter earnings. The Bank of Japan also maintained its policy. The Chinese economy remained weak due to property issues and low confidence. Initial policy responses were underwhelming, but later measures sparked a rally, which was tempered by concerns over U.S. trade policy from the incoming Trump administration, resulting in about 15% CSI 300 gain. The CSI refers to the Shanghai Index, which measures the performance of the Chinese market. Elsewhere in Asia, Singapore benefited from its stability and neutrality, while the Taiwan market surged 28%, due to its role in the manufacturing of AI hardware. AI refers to artificial intelligence, which is now a big theme And Taiwan is a big manufacturer of semiconductors. In fact, one of the largest companies that we hold in our portfolio is a Taiwan semiconductor manufacturing company, TSMC, which was also one of the companies that really surged in 2024, and that contributed to Taiwan's performance. In the fixed income market, the bond market faced high yields and volatility. Government bond yields rose in major economies, with the U.S. Treasury yields really fluctuating last year. I'd say we saw one of the most volatile U.S. Treasury movements. If you look at the U.S. 10-year bonds last year, we started the year at around 3.9% for the U.S. 10-year paper, to rally to about 4.7% at around end of April, before dropping to as low as 3.7% at the end of September, before going up again to 4.5%. This kind of movement for the U.S. 10-year bond is actually quite unprecedented, and actually demonstrates how unsure and uncertain investors were about where they should be putting their money and how much they should be demanding as compensation for their money in the U.S. 10-year treasuries. But despite the Fed rate cuts, yields rose and the curve steepened. Republican election optimism initially boosted yields but raised inflation concerns. And around that time, the ECB itself began easing amid Eurozone economic uncertainty. Commodities, this was an interesting area last year. Commodities had a mixed year, with the S&P Goldman Sachs Commodities Index gaining 2.61%. Oil prices were stable, but I'd like to say that they seem stable from comparison from how the year started to how it ended, but in between we had significant movements in oil, but ended up closing just almost where they started. But the most interesting ones were natural gas, which surged 44% due to cold weather last year. And gold itself, so its best gain in 14 years, gaining almost 30%, driven by U.S. monetary easing, geopolitical risks, and persistent record central bank buying. So gold is considered a safe haven. If there are concerns in markets about what is happening to the stock markets or what is happening to the bond market, investors, including central banks, will actually shift into buying gold. And that's where, if you look at that chart there, you can see gold had a spectacular performance in 2024, gaining 27%, being one of the biggest outliers last year. Agricultural commodities saw dramatic price movements, with cocoa and coffee soaring due to supply issues. For those who follow our YouTube videos, you remember that one of the commodities we were actually looking at was cocoa, and that was a fantastic movement in cocoa, which gained about 178%. Coffee gained almost 70% in the same year. So that's a cocoa chart. You can see cocoa gained 178% last year, and that's a phenomenal return for any asset class. Locally, if you go to the local market, the Nairobi Stock Exchange saw a very strong Q4 recovery, leading to a 34% year-on-year gain, mostly driven by banking and telecommunication sectors. And positive local and global macroeconomic outlook suggests potential for further growth this year in 2025. And again, locally, one of the things to also note is that the local currency was very well supported, trading largely, moving towards the 129, 130 territory. And we expect that this is going to remain so due to strong local forex reserves and a balance of demand and supply in the local interbank market. So what's our outlook for 2025? I know we are doing this AGM, 5 months into the year. So I'll try to balance the outlook for this year versus what we've already experienced so far. So looking forward to 2025, optimism optimism was tempered by the need for realistic expectations after 2 strong years. Like I mentioned, we had 2 strong years in the S&P where we had over 20% performance. This has not been seen since the 90s. So, of course, it means we go into 2025 with a little bit more cautiousness and prudence in how we approach the markets. The U.S. economic resilience is crucial for continued equity gains. While the Fed's rate cut expectations have been adjusted, the ongoing cutting cycle should support stocks despite the current cautious approach, which may keep short-term rates higher. The impact of Washington on financial markets has rarely been quite as profound as in the current climate. Initial optimism around the prospect of tax cuts and deregulation across key industries has been overshadowed by trade policies. By the end of 2024, the weighted average tariff on all U.S. imports was 2%. We literally did not really have the U.S. imposing tariffs on other economies. But this has now risen to 17%. And in the Trump administration, of course, and I'm sure a lot of investors are wondering how we'll navigate this and what to expect. If you look at what has happened, the Trump administration has imposed tariffs as high as 25% on Canada and Mexico, which are the 2 largest trading partners for the U.S., and as high as 245% for China. Even if right now, as we have this AGM, these figures have come down significantly, as the Trump administration has initiated a 90-day pause to allow for a renegotiation of trade policies following retaliatory actions from other countries towards the U.S. So this drastic change of trade policies has created a massive surge in volatility in markets. And this is also something we also shared with the investors in the first quarter report. But it has also created appetizing opportunities for portfolio managers to squeeze good returns from short-term moves. I want to emphasize to investors that volatility for fund managers, especially in a multi-asset strategy fund like ours, is not necessarily a bad thing. And we are actually able sometimes to actually find a lot more opportunities in environments like this. A very good example being you can actually be invested in what you call the volatility index, meaning you actually make more returns for the fund as volatility increases in the markets. So with this in mind, we continue 2025 optimistic yet balanced with our outlook, cognizant that volatility provides a very well diversified portfolio with enough opportunities across asset classes, sectors, and geographies in an ever-changing landscape. At the same time, we are still seeing enough appreciation potential across individual companies to maintain a constructive risk-on stance. So just as I finish this, one of the things I really wanted to mention to investors is that this is an abridged version of most of the reports that we share with investors. In 2024 alone, I think we shared over 10 global market outlooks and reports. So we'd really encourage our investors to be reading those reports. Every quarter as well, I do a YouTube video just giving a breakdown of what has happened in that quarter. We'd also encourage our investors to be watching those videos. The reason for this is it helps investors to really understand where your return comes from and to understand the diversification and downside risk protection measures that we undertake on your behalf. And most importantly, we want to continue thanking you for believing in the fund and for making today's first AGM for MANSA X Special Fund a success. Thank you very much. And back to you, Chairman. Thank you.
You agree with me that the fund manager has done a fantastic job. And you'll concur with me that he and his very able team deserves to be congratulated for this most good performance that we hope that will continue into the future. As I said earlier on, we do have a trustee who actually oversees the safety, the security of your investments. And I will now invite Kevin, who is the CEO of the trustee company, Kingland Court Trustee Services Limited, to give us his trustees report. Welcome, Kevin.
Thank you, Bwana Chairman. Asante sana. Good morning, ladies and gentlemen. Thank you for joining us. Our gratitude that you've made time of your schedules to come in, sit and discuss, or rather and engage, so that we can appreciate what has been going on in the scheme. And welcome once again to our first ever annual general meeting for the MANSA X Special Funds. Just as a comment, according to the new capital markets regulations, the CIS regulations that were issued in 2023, we are now required to be holding annual general meetings with our investors, where we'll brief them of key matters that have been transacted throughout the year. We therefore confirm that this is going to be a standard calendar engagement every year, over and above the YouTube video that you're used to. You will now be having an opportunity to actually receive remarks from the scheme. As part of good governance and promotion of separation of roles, the fund, which is registered as a trust fund, has appointed service providers who offer various roles within the fund to ensure that there is protection of both the assets of the fund and also good governance as it were. So we have the fund manager, whose role is, as you've had, to make investment decisions and actually make the investment transactions on behalf of us as investors, so that we can be able to attain the level of return that we have been attaining. The scheme, or rather the fund, is registered as a trust fund. It is an amalgamation of a number of funds within it. And one of the key reasons why we registered the fund as a trust fund is so as to have a separation of assets between any service provider, any professional provider, from the investor's assets. Therefore, which, for instance, means that the assets of the fund do not form part of the assets of the fund manager in terms of their books and their balance sheet, and we are not fully to any of the service provider's fortunes. Should anything happen to the trustee, the assets of the scheme are totally separated from the assets of the trustee and therefore protected to that end. We are regulated by the Capital Markets Authority, who licensed us, and I'll talk about licensing shortly, and to whom we report both as trustee and as a fund, so that we ensure that we are always working within the bandwidth of what the law provides and what is expected in terms of the trust deed and rules. We are the trustee, and our key role as a trustee is to ensure, our primary role is to ensure that we safeguard the assets of the scheme and protect your interests as investors. That is our key role as the trustee. And we do this by ensuring compliance with the regulations, compliance with the trust deed and rules, and compliance with the information memorandum as was defined when you are joining the fund. So that is our key responsibility, and we confirm that in the full year 2024, and our intention is that for the lifetime of this fund, as long as you are trustee, we shall always continue to protect your interest and protect and safeguard the assets of the fund. We also have a key partner who is a custodian. As we've mentioned, we separate the assets of the fund from any other provider. So the assets, title to the assets, are held by one party called a custodian. In this case, I&M Bank. Currently in Kenya, you're supposed to be only a bank can be a custodian. Therefore, I&M Bank are our custodian. They hold title to our assets and they keep those in safe custody. Again, as per the regulations, and you've heard from the external auditor, we are required to audit our financial records on an annual basis, and this has to be done by an external independent auditor. And we have Chatify LLP as our external independent auditor, who have already shared their opinion on the matters for the fund. Moving on, in terms of our responsibility, in terms of the investment performance, we confirm, and you've just heard from the fund manager, that the funds had a tremendous run in terms of performance. This is despite the challenges that we had both locally and globally. we still were able to achieve a very good return of 19.53%, being a net return offered to the MANSA X Kenya Shilling Fund. As we look first to the Kenya Shilling Fund, we had a 19.53% return, and we really appreciate the good work by the investment team so that we can be able to achieve this. So this is a testament that over the period, if you can look for the last 3 years, we've always consistently had a strong double-digit return, having an 18.01% the previous year, 2023, 2022, 15.59%. And if you're part of the investor briefings, you'll note that even 2021 and the prior 2 years, we still had strong double-digit returns. So thank you to the investment manager. As far as the growth is concerned, in terms of value, we grew by close to 100% in terms of fund value, whereby we now sit at about 40 billion shillings by the end of the year 2024, up from about 20 billion shillings in the year 2023. In terms of that means that we had about 100% growth, and that is thanks to you as members, and we do not take it for granted that you continue to show your interest, you continue to show your confidence in what the fund is all about. Again, just to confirm, the audited financial records were reviewed by an external auditor as is required by the Capital Markets Collective Investment Scheme regulations, so that we ensure that at any point in time we are within the regulations and or within the financial reporting standards and protect the members' interests as well. So the full set of accounts, again, as the chairman alluded, were made available through a link, and you can. This was also advised to you during when we are issuing the notices for you to attend this AGM. You can have a chance, go through them, raise any questions through the question and answer session, or even after that, you can still make any inquiries, and I'm sure our team will be at hand to give you all the necessary support in terms of a response. And finally, in conclusion, we'd wish to confirm again that as part of the requirements of the new collective investment schemes regulations, we were required to register fresh as a special CIS. And we confirmed that in July 2024, we were successful. We made our application to the Capital Markets Authority. They reviewed our application, considered it, and we received our renewed or revised updated certificate in the year 2024. And we intend to maintain compliance with the provisions and expectations of those regulations, and of course, in the best interests of the members. If I move on to the USD fund, again, our role still remains the same, that it is our role to safeguard your interests in whichever fund you will be sitting in, and the USD fund as well maintained compliance. We were compliant with all the requirements of the regulations. We normally are required to, among other things, submit reports to the Capital Markets Authority on a quarterly basis and any other frequency that they may request, so that at any point in time, even the authority is aware that we do our best to maintain compliance and always have your interests at heart. As far as the performance is concerned for the USD fund also had a similar strong performance in the year. We had a return of 12.5% for the year 2024. Again, a very, very strong return given that it is a USD return. And as keeping in tradition of a double-digit return, the previous year we had about 12%, and the year 2022, in as much as it was a partial year, we still had managed to get a 10% return. Again, all that is thanks to the good work by the fund manager. And in terms of numbers, we grew, just to confirm again, we grew by over 100%, close to 150% growth from 20 billion shillings all the way to 53 billion shillings. A key testament of not only good investment performance, but also the confidence in you as investors, for those who invest also in the USD fund, a confidence that we are doing something right and you are working with the best partner possible. As far as the USD fund is concerned as well, we conducted the financial review on an annual basis as is required again by law, and the financial statements specific for the USD fund are also available so that you can be able to review this, make any comments, and reach out to us should you feel like you need any support to appreciate any content that is within that. Still, again, as part of the expectations, because this is still a fund that needs to be recognized by the Capital Markets Authority, we went again through the whole application process, and we received our approval again in the year 2024, in the July 2024 to be specific, and the fund is well registered and oversight is offered by the Capital Markets Authority. I'll beg to stop at that, but as I do so, I'd like to sincerely appreciate our profound appreciation that you have given us the opportunity, the trust to partner with us, and the continued support is not cannot be overemphasized. We sincerely do appreciate that. We want to express our keen interest that we'll always continue looking out for the members' interests, for the investors' interests, even as we look out for a very, very good investment savings life with the MANSA X special funds. Otherwise, asanteni sana, and I'll hand it back to the chairperson. Thank you.
Thank you very much, Kevin. We are truly delighted that we have a trustee of that caliber. They have actually made our work much easier because they keep asking the necessary questions, which we try to respond to as fund managers. And they have continuously shown their commitment, and we are most delighted for this. Before we proceed to our next session, which is basically a question and answer session, I will ask Mr. Mungai again to give us some information on actual performance of the fund during the period. Thank you.
Thank you very much, Chairman. So I'll quickly take you through the performance of the MANSA X Special Fund in 2024. So we were very delighted that in 2024, the MANSA X Special Fund, the Kenya shilling version of it, delivered a net return of 19.53%. And just to be clear, this is actually the highest performance the fund has ever achieved since its inception. Something that's quite a feat, considering that the fund has grown exponentially since then. And this was driven by a diversified, risk-managed approach across global equities, high-quality bonds, and select alternatives. The fund's AUM grew by 102% to close the year at 39.05 billion shillings. 8,613 new clients joined MANSA X Special Fund. That's an increase of almost 85% of the clients that we serve, closing the year with about 19,000 clients under the Kenya Shilling Fund. So I'd like to draw your attention to that chart in the middle that shows you the growth of our clients from 12,000 in Q1 to 18,000 in Q4. And that's something that we are very appreciative, as a trustee said, that we have had a lot more investors join the fund and entrust us with their funds. Then the first chart demonstrates the kind of quarterly returns that we had in 2024. Each bar represents a quarter. And this is very important to emphasize that MANSA X does not deliver a straight line return. For those investors who are probably still don't understand this bit, MANSA X returns are actually what you call market-determined returns, meaning that some quarters are better than others, and eventually what we like to do is to create a return that's typically performs better than what you have out there, but sometimes it goes up and down. If you look at Q1 2024, the fund returned 5.62%. Q2 2024, the return was lower at about 5%, to then go up in Q3 of 2024 to about 5%. Q4 of 2024 was much lower at 3.78%, and this was due to uncertainties around interest rate expectations and the fact that what you call at the Santa rally that typically pushes markets up in December did not happen in 2024. However, this did not change the fact that the entire year the fund returned 19.53%. But this chart also helps investors to understand one thing, and this is why it's really important to look at it. It demonstrates the value that investors get when you invest with us for a much longer period. Because if you invest for a period as an investor, you might be subject to the vagaries of the market. If the markets are changing in value over a short-term period, then you become exposed to those movements. But investors who are with us for a much longer period tend to benefit much more because their funds eventually take advantage of the long-term success of the fund. So the MANSA X dollar fund, in 2024, the fund delivered a total return of 12.5%. And these returns that we are quoting here are net of fees, driven by a diversified risk management approach across global equities, high-quality bonds, and select alternatives. Again, the fund's AUM grew by about 158% to close the year at $53 million. About 2,000 new clients joined the dollar fund, which is about 150% increase. Closing the year with about 3,150 new clients. Again, if you look at the quarterly return, it demonstrates the near-term differences in the performance of the fund on a quarterly basis. Again, demonstrating the importance for investors to invest longer term with us. Moving forward, in 2025, we expect that the performance of the fund will continue to be robust. The strategies are still very similar, and the strategies are designed to weather the shocks of any changes, even the geopolitical and policy issues that we are facing this year, especially around the tariffs. We are still very confident as fund managers that we will be able to navigate those and, in fact, might actually provide investors with more opportunities to squeeze out a better return. Thank you very much, and back to you, Chairman. Thank you.
Thank you very much again for those very encouraging figures. We now come to a session where we give members opportunity to ask questions and for the panel here to be able to respond to those questions. As I said earlier on, we do have two platforms or two opportunities or two levels where we can ask questions. The first is in your portal where you can actually touch the tab titled question on your dashboard, or you can alternatively dial the USS code, which is *483 *104#, and then follow the prompts to submit your questions. We are grateful that some of you have already sent in your questions, and this will be responded to. And we shall endeavor to answer all your questions as much as we can. But in the event you don't hear your question being read, please don't feel discouraged. Because you still have an opportunity to do so, even as we proceed with this process, not just today. As the trustee said, you can continue sending in your questions and you'll definitely get answers. We do create as many opportunities as possible for members to be able to ask and receive answers to all their queries. For now, we shall take a short break before we actually start answering the questions. Thank you very much and welcome.
This fund is actually designed to protect against capital erosion for clients. So how do we do this? The first and most obvious way is full and real portfolio diversification. What I mean by this is, if I was a fund manager with only 6 asset classes available to me and needed to protect my investors from the volatilities in any of those 6 asset classes, it becomes exceedingly difficult because there are so few, and it becomes very difficult to create a nice portfolio allocation methodology around only about 6 assets. However, if I have 200 asset classes available to me, and some of them unrelated to the others, it allows me to create a strategy which not only makes a good return for investors, but also protects them from the downside risks that they would be faced with if there were an unprecedented price movement in any of the asset classes. So like what we saw in the first quarter of 2020, where oil prices for the May futures dropped almost 100%. Okay, you can imagine if I was a fund manager who only trades oil, then it would be very difficult for me to have risk management around that. But even if I was on the wrong side of this trade and I have 200 other asset classes that I trade, I might take a hit on such a trade, for example, and I'm not saying we did, but I might take such a hit on such a trade, but still be able to squeeze out a return simply because of the other asset classes available to me. That's the first thing. Then the second thing is we have stop loss limits on every trade we enter into. We get into a trade knowing that it might go against you, and therefore if it goes against us, is that loss something that we're willing to take? Is that loss something that the fund can recover from? So we automate these processes. Internally, we've automated these processes to have automated stop loss limits. On top of that, we have what you call exposure limits, meaning at any one time, we don't expose more than a particular percentage of the fund to any one asset class. Again, removing too much reliance on one asset class, back to the diversification point that I alluded to earlier. One of the other very important risk mitigation techniques that we use is actually just the use of defensive methods of trading, which is keeping a significant portion of our fund in cash and cash equivalents. So that's very important because it means that at any one time, if we are wrong about, let's say you have a black swan event where every single asset class goes exactly the wrong way and you did not anticipate it, we also have cash and cash equivalents, meaning that our investors' funds are not fully exposed in those markets. And of course, the final one is also hiring the best traders. Okay, we have very well qualified traders who know what they're doing. They have a combined experience of more than 20 years within the funds, within the financial services industry, and particularly trading, not just for funds such as ours, but also trading for big banks. Okay, and this has helped them to align their trading within a very conservative risk management framework.
My name is Dr. Perry Simburo. I'm a consultant in the financial inclusion space, working with youth, women, and SMEs. In the course of my work, I come across clients who want to know about investments, where they want to put their money, the returns, and the safety of the fund. From the experiences we have seen in the market, people have lost their money. So I decided to do a little bit more research in the market, first to discover, if there were funds that would pay above the inflation rate, because that is what I normally advise my clients to do. And I came across SIB, and I sought more information from the company. I was referred to a fund manager who gave me more information, and from there I think I was confident with the information I got. SIB, being a regulated institution, took away a lot of the doubts I would have, and I was confident to recommend SIB as well as invest in it myself. My experience with MANSA X has been great. The returns are above the inflation rate. The company is stable. There's a lot of information and press releases by the top management that give you the assurance, even to show where they invested and why they did it. It's not one of those where you're not sure. So they keep you updated about what they're doing with your money and how they're able to get it. So that gives you a lot of assurance and confidence. The returns I get from MANSA X, number one, they're a source of passive income. you can choose to turn that into your income. I mean, every quarter you have a certain amount, you can distribute it over the next number of months before you get the next return, or just reinvest. I choose to reinvest the amount unless I have a pressing need that would cause me to withdraw part of it. Yeah, and that is a magic behind growing the fund. You just keep reinvesting the returns and the fund keeps growing. SIB is a very stable fund management company. It's a stable bank. I love the staff. The fund managers are friendly, always on hand to tell you everything you want to know and answer every question that you have got. And I just keep saying that the returns are way above the inflation rate. I don't know what else anyone would ask for. So that to me is what has kept me here. And I will continue to talk about it.
Thank you once again, members, for asking very, very pertinent and very useful questions. We are ready actually to address this. May I give the confirmation, because there are very many questions which have been asked. A lot of them have already been answered through text messages, especially those that are very particular to a particular individual. We have also set up a frequently asked questions section on your website where you find detailed responses to the questions. And I will now be able to give this opportunity to the panel who will respond to these questions, starting with the first question that we have selected among the many to represent others. The first one will be, is the question, is it possible to have statements sent monthly instead of quarterly? This question will be answered by the fund manager principal officer, Mr. Mungai. Once again, please.
Thank you very much, Chairman. So on this question of statements and whether we can give monthly statements to investors, we found a sweet spot in giving investor statements on a quarterly basis. But it's an ongoing conversation both with our investors and also internally, and as shifting dynamics of investor expectations change. When we started this fund back in tail end of 2018, our initial idea was actually to give real-time updates of statements and investor performance. But our initial experience with that was a bit different from what we expected. We noticed that investors would have a lot of anxiety because then they would be exposed to market movements on a daily basis. And I can tell you, the market movements on a daily basis are not very easy to deal with. That's why it's a very tough job being a portfolio manager. So eventually we tried to see, can we do it weekly? But even then, investors would have a lot of concerns if markets are low, and if markets outperformed, then they'd get maybe overtly exuberant. So over time, we settled on the quarterly date for investors in terms of giving statements, which now was a period that was not too long before receiving statements, but was also not too short to expose investors to the anxiety of dealing with market dynamics in terms of how it changes. However, we are very open to feedback, and if we get enough push from investors and they're happy to receive much more frequent investor statements, then it's something we can consider. Because just to be clear, MANSA X special funds, all of them, or the MANSA X funds that we have, are actually valued on a daily basis, meaning that every day you can actually get your statements. But if we get enough push from investors and they're happy with a monthly date, that's something we are willing to consider. I guess this is something that's open to conversation, and we'll also be engaging our trustees to also get feedback from investors. Thank you very much. Back to you, Chairman.
Thank you. The next question will be answered by Pauline, the Finance Director, and relates to a MANSA X app, please.
Thank you, Chair. Thank you, Chair. We received this question from our investor, Benson, and this has been a very popular question, and we've noticed a lot of our investors are wondering the same as well. On the app, we have engaged vendors for the last couple of months, and then app is currently in the test environment. We are hoping we will have a live date by end of June, where you shall be able to view statements, update your MANSA investments, and also request for withdrawals. So we are working to make sure that we are on an app that will be robust and will have make the life of an investor very easy. Thank you, Chair.
Thank you. I hope that you feel satisfied with that. We can give you an assurance that this is receiving a lot of attention from the board of the fund manager company. So it will definitely be in praise, all things being equal. I now want to ask Nashon again to respond to the next 3 questions because they are fairly related in what he does on a daily basis. Nashon.
So I have been asked what the strategy for the company's growth is for the next 3 to 5 years. So I'll answer this question partly by also looking at what brought us here. And what brought us here was adaptability and innovation. So we created MANSA X as a solution to investor concerns. Can you give us a solution that allows us to weather the storms locally? Because investors used to have to wait when we have bear markets, and they only had a few investable products, which was just real estate, maybe some local fixed income, and a few local stocks. So we created MANSA X to give investors access to global markets. So moving forward, our strategy remains the same. Creative products that are innovative and adapt to client needs. We are seeing a lot of growth areas, even in creating new funds or even variations of MANSA X that cater, for example, to different risk appetites. You know, we have investors who have more risk appetite and others have less risk appetites, and the ability to also create funds focused on only particular sectors. Maybe accelerated growth and so on, or distressed debt. We also seen a lot more opportunities as the fund grows bigger into private credit and private equity areas. And all this is part of the strategy, but again, very client-centric, focused on answering client needs. And we believe that in 3 to 5 years, the same way now we have about 4 variations of MANSA X, we expect we'll probably have at least 10 more variations of the same thing, catering to different niches. For example, if you see in the last 2 years or so, we created a Sharia version of MANSA X. That's just a very good example of how we continue to create products that are client-centric. So moving forward in the next 3 to 5 years, continued adaptability, innovation, and a client-centric approach to how we deal with investor needs. That's our strategy moving forward. Thank you. Okay. Thank you, Chairman. There's also a question here from Philip Okinda, who was also asked that a question, given the recently implemented U.S. tariffs, which sectors are likely to be most adversely affected? And what is the fund's current exposure to these sectors? That's a rather technical question, and I'll do my best to answer it the best I can, especially because right now, based on the fact that tariffs are shifting so rapidly, there's no straight answer for this, but I'll try my best. So the newly imposed tariffs are expected to impact key sectors, including electric vehicles and batteries, clean energy, and solar technology, semiconductors and electronics, and critical minerals. These measures will likely reduce the competitiveness of Chinese EV manufacturers in the U.S. market. So prompt alignment of battery supply chains towards North America and allied partners will become very important, especially around shifting global supply chains. We'll also see, and this is something that we are already starting to see, capital rotation away from the US towards Europe and select emerging markets, driven by valuation differentials, evolving trade dynamics, and investor search for geopolitical and regulatory stability. This trend may create dislocations in asset prices and offer new opportunities across regions that are better positioned to absorb global capital flows. The fund, however, and this is the part I want to emphasize, remains well diversified across sectors and geographies and continues to actively manage exposures in response to these developments. Our long-short investment model allows us to capitalize on dispersion resulting from trade and capital flow shifts while maintaining a disciplined risk management framework and a clear focus on preserving investor capital. So we'll definitely see rotation of capital and so on. We'll see shifting, maybe reduction in the U.S. prominence on the global stage. But then they also create a lot of opportunities now in the Eurozone, emerging markets, and Asia, and we'll be looking to capitalize on these shifts. One of the things that the fund is very good at is having counterparty relationships across the globe. So your funds are exposed to brokerages and custodians that are domiciled across the globe. So we are not exposed to any one particular area that would then put your funds at risk if there was a very negative performance due to tariffs. Then there's another question from Alex Mwangi. His question is, considering the current global economic uncertainties highlighted in your first quarter 2025 report, the fund's objective to deliver above market average returns, how are the trustees ensuring that the long-short strategy is being actively managed to both protect capital and capture emerging opportunities, particularly in light of the noted shifts away from the previous market drivers, like the Magnificent Seven? Again, a very technical question. So the fund has continued to generate positive alpha amid market uncertainties, driven by our adaptive, active market management approach. So our fund is very actively managed. We are not fully reliant on any one particular group of stocks or sector to deliver a return. To give you an example, at any one time, the fund holds in excess of 250 individual stocks spread across the world. Of course, about 60 to 70% of those stocks are American stocks, but it just goes to show you how much we don't have that much dependence on any one particular group of stocks. The only reason we highlight the Magnificent Seven is because the last 2 years they have performed so phenomenally that it becomes something that fund managers have really just benefited from. That's why we highlight them. But it doesn't necessarily mean that the fund is fully dependent on the performance of some of these stocks. Again, you'll find that within the portfolio, outside of stocks, and a very good example is what happened in Q1. Towards the end of March, we had very poor performance in the stock market. But again, we were able to really deliver returns because of performance in commodities, where, for example, we saw oil movements, a lot more sharply moving to the upside. And gold, for example, that gives you a very good indication of how, even outside of a diversification within the equities book, we also have very strong backup from asset classes like commodities and metals. Again, in addition, we implemented targeted hedging strategies designed to mitigate the impact of outsized market movements. This is very important to note. The fund, because of the nature of the fund being a long-short fund, it means that even when there are adverse market movements, the fund is able to create short positions that mitigate the risk of falling asset prices across the board, across the board of all the asset classes that I've mentioned. And our dynamic asset allocation framework enables us to continuously adjust portfolio exposures in response to evolving market conditions. So I just want to give comfort to investors like Alex that you shouldn't worry about the shifting nature of markets right now. It will only mean that on our end, as your portfolio managers, we will continue to just shift the portfolio to enable you to make a return out of that. Thank you very much. Back to you, Chairman.
Thank you very much for those very comprehensive answers to the questions asked. The last question that we want to respond to is about taxation. And our trustee had already alluded to this. But I would ask our tax consultant, who is also the auditor for these funds, Mr. Jero, to respond to the last questions that is before us. Thank you.
Thank you, Chair. We appreciate that the tax question is on whether the funds returns are taxable or is there withholding tax. We just want to confirm that the umbrella fund is a standard investment trust fund, has an active tax exemption certificate that is issued under the Income Tax Act, Section 20, which confirms that the fund is exempt. Therefore, the returns that are generated out of the fund can be described or be classified as qualifying income, of which when you're receiving the returns themselves, they have already been subjected to the relevant taxes in terms of withholding taxes. However, it is important to note that depending on your registration, whether you are a corporate entity or an individual, the tax treatment is different. And I will always advise you to maybe consult either your tax consultant or the person relevant when it comes to filing your returns. So that is the position on the withholding tax. Thank you.
Thank you very much, Bwana for that. And we want to say we have come to the close of this session. But I want to re-emphasize that you can continue asking your questions through the available platforms that are provided. And I want to say that we have come to the close of our agenda this morning. And before I close, I want to say thank you once again, members, for your presence, for your very articulate questions. And we also want to thank all the service providers, including especially image registrars. Image registrars have provided us with this service to be able to reach to all of you wherever you are. And we take this opportunity to thank image registrars sincerely. I also want to thank all the other parties who were involved here, the trustee, the auditor, and staff of the fund management company here with me, Madam Pauline, who is the finance director, Mr. Nahashon Mungai, who has dealt with a lot of this stuff as the principal officer for the funds. We thank you most sincerely for your continued support and helping members. With that, I want to hereby declare the meeting closed, but continue interacting with us, continue putting your money under these funds and any others that will be brought forward, because I believe that you are going to get a good return. We have seen over the last 6 or so years very good returns out of these processes, and we believe that we have what it takes for members and investors to continue earning. As was said, it is a very good strategy to plan to invest long term as opposed to short term. But of course, the fund is robust enough that if you have a need, you can always come for your money anytime without any challenge. So it is something that we value about the liquidity of the fund is an important aspect of this fund at any time when you need it. But it's good to plan to invest long term so that you can maximize the benefits that come with this kind of investment. So thank you very much. We shall now be in silence as the national anthem is prayed out. Thank you.
Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.